You probably noticed everything costs more these days, from groceries to gas, and it's taking a toll. Right now, credit card debt is at an all-time high, with millions struggling to make ends meet. Did you know that credit card defaults have reached their highest level in 14 years? If you're feeling the pinch of rising costs, high interest rates, or mounting debt, this is a topic that could hit close to home. Here, we will look at the causes of rising defaults to practical tips for staying ahead of your bills. Let's start by breaking this down. Over the first 9 months of 2024, credit card companies wrote off more than $46 billion in unpaid balances. That's a 50% increase compared to the prior year, and it's the highest level since 2010. What's behind this spike? It's a combination of factors, but a big part of it is inflation. Prices have been rising across the board, from groceries to gas, and it's squeezing budgets everywhere. On top of that, interest rates on credit cards are higher than they've been in years, making it even harder for people to pay off their balances. Now, you might be wondering, who's feeling this the most? Experts say it's the bottom third of earners in the US, people whose savings have completely dried up. While high-income households have been able to weather the storm, but for a lot of Americans, there's no cushion left. In fact, some reports show that the average household owes over $10,000 in credit card debt. Imagine trying to manage that on top of rent, car payments, or even student loans. And it's not just about credit cards. Total household debt in the US has climbed to a record $18 trillion. That includes mortgages, auto loans, and student loans. So, if you're feeling overwhelmed by debt, know that you're not alone. This is a widespread issue, and it's affecting people across all age groups, especially younger borrowers. Data shows that delinquency rates, those late payments that turn into serious problems, are rising fast among millennials and Gen Z. These are folks who are often just starting their financial journeys, and they're already facing major hurdles. Let's talk about why this matters. Even if you're managing your debt well right now, when credit card defaults rise, it can ripple through the entire economy. Banks tighten their lending standards, which means it becomes harder for everyone to get approved for loans, whether it's for a new car, a home, or even another credit card. And if the Federal Reserve continues to keep interest rates high, this could add more pressure on families already struggling to make ends meet. So, what can you do if you're feeling the weight of this? First, take a close look at your spending. It might sound obvious, but tracking every dollar can help you identify areas to cut back, even temporarily. Focus on paying down the debts with the highest interest rates first, because those are the ones that will cost you the most over time. And if you're juggling multiple debts, consider talking to a financial advisor or even your bank about options like consolidation, which could lower your monthly payments. Another tip is to avoid relying on credit cards for day-to-day expenses if you can help it. It's easy to fall into the trap of using credit to cover gaps in your budget, but that can lead to a cycle of debt that's hard to break. Instead, try building up an emergency fund, even if it's just a small amount at first. Having a little cushion can make a huge difference when unexpected expenses pop up. Now, some of you might be thinking, what about interest rates? Aren't they supposed to come down soon? While it's true that the Federal Reserve has hinted at cutting rates in 2025, it's not likely to be a quick or dramatic change. Even if rates go down, they probably won't drop enough to significantly reduce the interest on most credit cards. So, it's still crucial to focus on paying off as much as you can now, rather than waiting for rates to improve. And here's a thought for those of you who feel like you're stuck in a never-ending cycle of payments. Consider reaching out for help. There are nonprofit credit counseling agencies that can work with you to create a plan, negotiate with creditors, and get you back on track. It's not always easy to ask for help, but taking that first step could be the difference between struggling and finding a way forward. Before we wrap up, I want to leave you with this. Debt can feel overwhelming, but it doesn't have to define your financial future. By understanding what's happening and taking small, consistent steps, you can regain control. And remember, you're not alone in this. Millions of Americans are facing the same challenges, and there are resources out there to help. So, what do you think about this issue? Have you noticed the impact of rising costs and higher interest rates in your own life? Share your thoughts or tips in the comments. Let's keep this conversation going, because the more we talk about it, the more we can learn from each other. Take care, and I'll see you next time.